What's up, everybody? Welcome back to the BrickBucks YouTube channel, where we talk about Lego investing, Lego reselling, making money online with e-commerce. My name is Shane from brickbucks.net, and today we're going to talk about what it really takes to be a Lego investor or Lego reseller. What are some of the things that you need to keep in mind to be successful at this? These are tips given from none other than Warren Buffett, who a lot of people will know as a stock market investor, probably the most famous stock market investor of all time. These are mentalities or approaches that he applies and he talks about as to how to be a successful stock market investor. We're going to take that and we're going to apply it to the world of Lego investing. And I'm going to talk a little bit about why some of Warren Buffett's approaches and the things that he thinks about when he's buying stocks are actually critical for Lego investors to also keep in mind when we are buying Lego sets with the intention of selling them later when they increase in value. So what are we trying to do here? Firstly, we are buying Lego before it retires, and Lego sets usually only last a couple of years on the shelf in your major retailers, and after that they're not available anymore. So if we buy them before they become unavailable, the price generally goes up afterwards. So it's an investment. We are resellers. We sell on eBay, Amazon, Bricklink, other websites, but we are also investors because we're buying an item that we intend on reselling at a later point. So there's a waiting, holding period in between. So it's kind of a balance between being a reseller and being an investor when you are buying Lego and holding it over time. So we need to be aware of some of the things that investors need to think about as to how to be a good investor, how to have an investing mindset. And I'm going to walk through some of the big tips that Warren Buffett talks about in the world of stocks. Okay, so the first tip that Warren Buffett likes to talk about a lot when it comes to stock market investing is understanding the risk. So he talks a lot about how you need to deeply understand a business before you buy shares or stock in that business, and that you should think about it as a company and not about it like a stock ticker. Okay, so he talks a lot about, reading the financial reports and reading the documents that come from a business so that you can understand the business intricately before you invest in it. Now, that is reducing your risk because before you buy anything, you really know what you're getting into. And Warren Buffett talks about it with a quote: "Risk comes from not knowing what you're doing." Now, in the world of Lego, it is very similar. We get the question all the time: is it risky to buy Lego for resale? How risky is it to buy 100 of a certain Lego set and wait a year or 2 years before I sell it? What is the real risk involved? The short answer is yes, there is an element of risk involved in doing this. There is an element of risk involved with every type of investment, and the reward that you get for taking on the risk is the returns that you get after you sell your investment. And so there is an element of risk, of course, and in our world, we can make a separate video specifically about the risks involved with Lego investing because that is a bigger topic. But generally speaking, you depend on the retail or the marketplaces that you're selling on. So if you're an Amazon seller, there's certain risks involved with being an Amazon seller, such as feedback scores, competitors joining the listings that you're selling on, or counterfeit claims from customers, or Amazon making changes that you need to adapt to. So of course there is some risks involved. Buffett's point here is to understand that risk and make sure that you are aware of that risk. Don't go blindly into an investment and just suddenly start buying things without really knowing what is the risk involved and what could potentially go wrong with this investment. When you understand that in detail, then you're ready, I think, to move on and actually purchase that investment. And other types of risks, obviously, in our world of Lego investing are damaged items. You're investing in a physical asset, and one of these boxes could get damaged and now it's worth less. Especially in warehouses where things get moved around quite a lot, things can get damaged. There are risks involved with that. There's risks involved with fire and flooding, and so the usual warehousing type risks involved with e-commerce and sale of goods also apply to this investment, which obviously you wouldn't have if you were buying stocks. So you really need to just think about all of the different types of risks, take measures against them wherever you can, and that is really how you get to the next level in terms of your ability of being a Lego investor. Now, expanding on that point about understanding the risk, Tip number 2 from Warren Buffett here when it comes to stock market investing is understanding the asset. So in his case, it's understanding the business that you're buying, which of course, it means reading those financial statements and understanding the company, knowing how they make money in detail, knowing, the management team and everything that's involved with a business before you buy stocks. In our world, it's very, very similar. So understanding the asset for us means knowing what Lego are doing, what the Lego group are doing, knowing what sets are being released, how many sets are coming out in each theme, the sales reports, the things that are selling well, knowing the supply and demand on the different marketplaces that you're involved in, knowing what's landing well in terms of Lego sets and Lego themes, networking and understanding kind of who's who in the world of Lego investing. So understanding firstly the industry, and then secondly the assets, so the actual thing that you're buying, and as much about it as you can is crucial. And that is kind of another thing that we're learning from Warren Buffett's way of teaching stock market investing, that the more you know about Lego and about reselling and about Lego investing, then the less likely you are to make mistakes and the better buying decisions that you will make. Now, the third tip from Warren Buffett when it comes to stock market investing is understand the numbers. He, of course, means balance sheets, income statements, profitability, and calculating out how many years it might take for you to get your money back and then to make a return on that money. So in our case, of course, it's very similar. Now we have an e-commerce business and an investment. So we need to think about things like return on investment and compound annual growth rate, but also we need to think about things like profit margin, which is, more of a kind of a business term or an e-commerce sale of goods type term and less of an investing term. Profit margin and things like sales versus or revenue versus profit and fees on your platform that you're selling on. There's all sorts of different numbers involved with Lego reselling, and we need to understand multiple different numbers before we can really calculate out whether we think an investment or a purchase is going to be successful. So that is another tip that we learn from stock investors and apply to our world of Lego investing. So tip number 4 from Warren Buffett is ignore the hype. This is one of my favorite tips on this list. This one is ignored all the time by Lego resellers. There is too much hype. There is too much bandwagoning. There's too much jumping into a set because everybody else is talking about it on the Facebook group. You need to do your own due diligence. You need to investigate and research the Lego sets before you buy them and take responsibility over your own investments. Now, I'm saying this even though we're making videos about Lego reselling. I don't want you to take BrickBucks videos and then think, okay, I'm going to go buy all these sets. You got to do your own due diligence. This is a big mistake in stocks, of course. It's the reason that we see certain stocks suddenly shoot up and everybody kind of jumping on board with a stock just because their neighbor is talking about it. And most of the time, as we saw with the dot-com bubble in the early 2000s, as we saw in 2008 when things got hot, and then we had big crashes in the stock market, when too many people are speculating and too many people are jumping into stocks without understanding the fundamental value of those businesses, it tends to lead to problems. And so that's what we see a lot with Lego. A lot of people in our world with Lego investing tend to jump in quickly into the sets that are hot and are talked about quite a lot. So to give an example, you have the Mandalorian Razor Crest, which was a really good flip in Q4. It was selling for high prices in Q4. So a lot of people were talking about the availability of that set so they could buy it and flip it in Q4. But then what I noticed was people were still trying to buy it in January and February. And what's going to happen then is the flip opportunity is going to come down because retailers are restocked and supply is back to normal. So then, the resellers who bought that or the investors who bought that have to hold it for longer now because the set is not going to retire anytime soon. So that is a case of the hype kind of getting to people, everyone buying a set because other people are talking about it, but they're not really understanding the strategy behind why people were buying it at the time. And then by the time they buy it, it's kind of too late for that opportunity. And now they're sitting on a set that, they're going to have to sit on for some time. Now, that's still a great set. I have a couple here, but it's just an example, I think, of people not fully having their own strategy and just jumping in and buying a set because other people were buying that set, and that is going with the hype. So what we need to do instead is we need to ignore the hype as much as possible, use it to give you signals. Like if you see people talking about something, don't ignore it, look into it, but just do your own research and just make sure that you are kind of really understanding the set and the theme and the things that you're buying before you actually buy it. And tip number 5 from Warren Buffett when it comes to investing that we can apply to our Lego investing businesses is to stick within your circle of competence. Don't spread yourself too thin. You may have noticed that Warren Buffett, one of the most famous investors of all time, has missed the boat in a lot of cases. He didn't buy Amazon stocks when they were in early stages. He didn't buy Google, Microsoft, Facebook, Tesla, a lot of these big companies that have increased in value a lot, because he has openly admitted that he didn't understand them, right? Warren Buffett is not a tech guy. He understands different types of businesses like insurance or like real estate or like Coca-Cola, right? So when it comes to tech, it wasn't his circle of competence, so he just let those opportunities pass him by. Now, you could argue that some of that was a mistake, but at the same time, there was a lot of people that lost a lot of money who invested suddenly in .com companies because they seem to be the next big thing, but those investors didn't really know what they were investing in or the value or what those companies were worth. So the point here is that we should stick to what we understand. Now, in our world, in Lego investing, that could be a theme, right? So maybe you spent some time digging in on architecture, right? Maybe you know Lego architecture very well. You know the history, you know that it has a kind of a certain routine in terms of retirement schedules. You know that maybe certain sets have lasted a little bit longer than others, like the New York skyline, which, having that information and understanding the Lego architecture theme in detail gives you an advantage when it comes to that theme. Now you know what the risks are, you know which sets might do better than others. Maybe you know that the skyline sets perform better than the landmark sets, right? So there is certain things that you now know because you have built an area of competence around Lego architecture. Now, an opportunity comes up in Duplo. Maybe you shouldn't go and suddenly buy that Duplo set, because maybe it's not an opportunity at all. You don't have the insight or the information or the knowledge or the background or the competency to identify if that Duplo set is a good enough opportunity or not, because you don't know enough about the theme. This is kind of generalizing, but it's trying to show a point here that you spend time researching and use that research. Stick within that competency. Don't suddenly start to buy things that you have no idea about, because it's much easier to make mistakes that way. Try to stay within things that you know, and if you don't know things that you think might be an opportunity, learn them. Learn the theme, do some research, talk to people that invest in that theme before you suddenly start to jump into them. And by sticking within our competency, you can do much better with your investments. So let's just quickly recap. We talked about 5 tips from Warren Buffett when it comes to investing that we can apply to our Lego investing and Lego reselling businesses. Those 5 tips are: number 1, understand the risk. Don't go into something if you think that it's easy or you think that it is without risk. Every investment has risk. You need to understand it. You need to understand the different things that could go wrong so that you can implement measures to make sure that you're ready for them. Number 2, understand the asset. Understand as much as you can about Lego, about the Lego group, about Lego as a toy, about the sales, about the demand, about the supply. Understand as much as you possibly can about the thing that you're buying. Number 3, understand the numbers. Understand what profit margin is, understand what compound annual growth rate is, return on investment, understand the fees on the platform that you're selling, understand as much as you possibly can about e-commerce and the metrics that are involved with running an e-commerce business, and investing and the metrics that are involved in analyzing investments. And bring those 2 things together and you will be really strong when it comes to the numbers for a Lego investing business. Number 4, ignore the hype. Don't jump into stuff just because everybody else is talking about it. Do your own due diligence, do your own research, make sure that you understand what you're buying. Just try to ignore that hype. Try to avoid making decisions just because other people are doing it. And number 5, stick to your strengths. and stick to your own circle of competency. If you've spent time learning something, focus on that area. Don't suddenly jump into things that you don't understand. Maybe that's themes, maybe that's certain sub-themes or certain types of sets. Stick in the stuff that you really understand, right? I'm not saying don't expand and try to start selling new themes or new, even different types of toys that are not Lego. But before you go deep on a brand new thing, if you suddenly decide you want to be a Funko Pop reseller, you got to kind of get your feet wet first. And it's kind of a mistake to suddenly jump into a brand new area that you have no strength or competency in without any history or experience. It's the same within the world of Lego with different themes and different sets. Maybe you know a lot about one theme. It might not map over very well to another theme. So just kind of leverage your strengths as much as you possibly can. Now, if you do these 5 things, there's no reason why you can't be a great Lego investor or Lego reseller over time as you continue to grow your business. So that's it for this video. I hope you found it useful. There are many, many more things that we can learn from Warren Buffett when it comes to how he approaches investing, and we can apply those things to our Lego investing businesses to make us better. And I will continue to make videos that share some of those things with you over time. If you found this useful, please don't forget to hit the like button. It really, really helps us out. It helps other people to find the video. And leave a comment and let us know, is there anything else that you have learned about investing or about reselling that you think is useful for Lego? Let us know in the comments, and other people can benefit from that information as well. So thank you for watching. I'm Shane from brickbucks.net, and I'll see you in the next one.